in depth I want, hey? So Woolies,
Yeah.
give us your in-depth look there. We're up 4.7%. Any specific reason why we've seen such a fantastic gain on the stock?
I think a number of things, Eleni. It's not just Woolies up in the day. I mean, if you look at a lot of other retailers up as well, we're talking
Massmart up,
Truworths,
4.4.
Shoprite. And in fact, I think the only retailer of note that isn't up today is Pick n Pay for obvious reasons. Although we can come back to that in a moment. I think Woolies, a number of things. They declared the dividend, 75 cents interim dividend. That's for the 6 months to December. And at the last results presentation, they made it clear they're going to wait until after the new dispensation with respect to dividends before actually declaring it. I think that's a good dividend. But secondly, I think, I attended that presentation back in February, and it really was quite amazing. You look at this new leadership in Woolies under Ian Moyer, and incredibly aggressive. It's a new type of leadership. They talked about their new generation of stores. It's going to start the new kickoff that's going to happen on the 26th of April on the William Nicol, not too far from the existing Pick n Pay, for example. And it says to me,
I remember you were at the results presentation where we actually both asked him with regards to the fact is it is strategically situated. I know that he said it isn't, but it is interesting that he has said that it does break his heart when he sees most people going to Woolies to buy the fresh goods, but then going to Pick n Pay to buy the rest. He wants to amalgamate that. Could it actually work under the Woolies banner?
Oh, very much so. And it's been working quite nicely for quite some time. I mean, under Simon Sisman's leadership, I think something like about 7 or 8% of total spend in Woolies is on branded products, i.e. the non-Woolies products. In this new dispensation I'm talking about, this new generation of stores, we're going to see about 7,500 to 8,000 lines, product lines in Woolies. That's close on double what you get in a normal
Can
Woolies.
they compete with the pricing power that Pick n Pay and Checkers has?
To use a terrible American expression, do the math. Go into a store and try it out. Actually look at the kind of prices we're talking about. They're not that far away from your ShopRites and Pick n Pays, and in some instances
going
even
into
cheaper.
shops and comparing prices?
Oh, I do it regularly. I do it regularly.
Okay, so I mean, True is also doing quite well. It's quite interesting that we're not actually seeing a very big increase on the other retailers out there. Would you be buying Woolies at this point at 50 Rand 40?
Well, I must admit, we actually hold the stock, and we've had it for quite some time now, and we like it. And I think at these levels, given the fact that we see a lot more upside potential in the stock, given the fact that I think there's still more to come on the clothing front, and significantly more to come on the financial services side. They've got a very clean book, and I think once we get consumers getting more of an appetite for credit, I think with this wonderfully clean book they've got, there's great potential for that to grow as well.
Yeah, ShopRite also up just over 3%.
Yeah.
I know that they've embarked on very interesting ways to fund their expansion into Africa. Some are saying, well, why do this? Why not just get debt on their books? What is your sense on this?
When you've got a share price as high as this, over 140 Rands a share.
There's room to dilute somewhat.
Well, precisely. And, I think once we start seeing even more potential coming through from Africa. Let's not forget these guys will have been in Africa for almost 20 years very shortly. The African side is working extremely well, and they're by far the biggest retailer in South Africa now. I mean, we don't get the Nielsen figures anymore, but nevertheless, they've got about a 35% market share, if my calculations serve me correctly, going exceptionally well. I think, it's one of these companies that is priced for perfection, make no mistake. It's not cheap, but the likelihood is it's not going to get an awful lot cheaper in the foreseeable future, in our opinion.
MTN has been taking quite a hard knock. It's down 4.5%, sitting at 128 Rand 99 cents. Is this all got to do with Iran and Turkcell?
Absolutely. And I think in this, you've got to try, if possible, to divorce the obvious political ramifications of this whole thing with Turkey, Iran, South Africa, with the actual operational side. Operationally, it's going very, very well indeed. But there could be a few problems for MTN along the way. I mean, Turkcell has made it abundantly clear. They've laid the charges in the US. This is an American court.
But this is interesting. But why 5 years later come and say, well, it wasn't done correctly?
Well, that's why I'm saying you've got to try and divorce the political from the actual. And there may be some other political overtones here. Let's not forget that Turkey, it's a big economy, 16th biggest in the world. It's flexing its muscles in the region. And it may just be that there's a certain political element to this that we don't know that much about.
ArcelorMittal down almost 2% today, and again, head-to-head with the Competition Commission and on about the collusion issues.
Yeah.
What is your sense on this?
You know, this is not what ArcelorMittal needed at this point in time. We haven't had it in the portfolio. We don't actually like the business model, frankly, that where you buy the iron ore relatively cheaply and sell it at import parity prices to the, internally and into the rest of the world. From an export perspective as well, we don't like the stock because it's a very expensive exercise selling finished product into the rest of the world, given our geographical location. But over and above that, as you rightly say, you know, they could now face the possibility of a 3 billion rand fine. They really don't need that in their lives. That was one particular risk. Other risks are environmental capex that's coming into play at some point in time, and the sheer lack of demand. So, you know, it's not something that we actually like the look of at this point in time, and we've never particularly liked the look of this company.
Okay, with regards to what we have been seeing coming through from Telkom, it's another company that has been in a negative light, and also now more drama and troubles coming through for
Again,
Telkom.
couldn't have happened at a worse time. You know, I've looked at this one in recent weeks and months, and I'm starting to see glimmers of hope that things might slowly and grudgingly start getting better under new management. I think Pinky Maholi's doing a great job. But the legacy problems, and this is another one, you know, and now they're being faced with the problem of maybe not being able to go ahead with their infrastructure overhaul. And goodness knows they need it. 13 billion rands worth of infrastructure overhaul. So, you know, unfortunately, it's just one problem after another with Telkom. So on the face of it, at points it might start looking cheap. That's why I've said consistently, you have to see a decent track record, a positive track record being built up in this one before you can start getting enthusiastic.
Telkom sitting at 23 rand 92, you wouldn't touch it at this
Wouldn't
point?
touch it.
Down
No, afraid not.
0.3% today.
Nope. You need clarity that all of these legacy problems that I've referred to, and they're profound, have been addressed, attacked, and in future we're not going to see the backwash from these.
Christopher, always great to speak to you. Thank you so very much for joining us. Christopher Gilmour from Absa.